Welcome traders, my name is Tomasz Wiśniewski and I'm a Chief Analyst in Alpari Research and Analysis, and welcome to a daily analytical report. We do have quite interesting movements right now on the markets, well, especially American stocks, right? All-time highs again, obviously. So the party goes on, everybody's very happy to buy stocks. I think they are not even calculating what stocks they should buy. They just buy whole sectors. They just buy anything that they see on the screens. Very interesting situation for me is the fact that stocks goes up, but at the same time gold goes up, right? I have a small theory that smart money are not buying stocks anymore. They are just buying gold right now. And stocks are now being bought by retail traders, by the street, right? The street that follows a signal which was created a few months ago, a few years ago. It is always like that retail traders are a bit delayed than the institutional investors. If that upswing on stocks would be legitimate, most probably the price of the gold would go down. But it's not. So we can see that there is a demand for gold, and we need to ask ourselves a question: why there is a demand on gold? If there is a risk on mode, the party goes on and everybody's buying, everybody's looking forward for further stimulus from central banks, from Donald Trump, his phenomenal tax scheme that he will propose soon. Everybody's waiting for that. So why there is this uncertainty shown in the price of gold, which is going up? That is my question, maybe not to you, but to the general situation on the market. We'll see how it will develop. I strongly believe that at least, well, this year, or maybe it can be the second year of presidency of Donald Trump, will bring a recession. Maybe not a recession like economic disaster, but at least a deep correction on the stocks, which should drive gold price even higher than they are now. From yesterday, what happened yesterday? We had a great CPI from United States. I will show you on the calendar, by the way. Great CPI from United States. As you can see, data came much better than expected. Also, second part of Janet Yellen speech. Also, a few words from other Fed members. They seem reasonably hawkish at the moment, even those which were dovish before. And actually the chance for a rate hike in March jumped from 30% to, well, it depends how we calculate it, but some of the calculations shows 37% chance, some of them 40%. So still below 50%, but the chance for a rate hike in March increases, but most probably it will be June. We also get EIA crude oil stock exchange. As you can see, last time this number was huge, and this time it was also quite big, but it didn't affect oil much. Oil freezed in one place. There is a side trend there. No trading signal whatsoever, and we are waiting for this situation to develop. So that what happened yesterday. We had the CPI, we had a bit of a Fed speak, which increased the chances for a rate hike. Could be considered hawkish. but in the same time the price did not declined sharply, and well, dollar didn't get stronger, actually got weaker, and on many instruments we do have a correction of strength of American dollar. Well, many so-called experts, they try to explain that always you will find an explanation for a market action, right? It's not hard. They're trying to explain that there's a bit of concern about this tax scheme which Donald Trump will propose, or traders are having doubts about the future of the economy, etc., etc. It sounds great. It sounds promising. It sounds legitimate. But this movement that we are seeing now is just a correction of the recent swings. So I would say it has more explanation from the technical point of view that traders are just taking profits from the recent movements. Then from the fundamental point of view that some of the market participants may stop believing in Trump or something like that. It's a good explanation as any. From today's calendar, what do we have? Well, we had a strong data from Australia. Unemployment rate dropped and employment change was higher, so more people found a job. That was good data. Also, we can see that on Australian dollar that is advancing higher. What is left is data from the housing market in United States, and tomorrow we have to prepare for retail sales fiesta. So retail sales from New Zealand and United Kingdom. We'll find that data tomorrow. So from the fundamental point of view, to wrap the situation up, we got all-time highs on stocks. So the party goes on. Everybody's happy. Everybody's buying. But in the same time, gold went higher. Well, driven also by weaker dollar. But in my opinion, also because there is a true demand on gold. Many probably smart guys, smart money are protecting themselves buying gold and waiting for a recession or at least a deep correction on stocks. What we had yesterday was also a bit of a Fed speak, which was perceived hawkish again, so that increased the chances for a rate hike in March to around 40%, depending on the way how we calculate it, which model do we use for calculations. And that's actually it from the fundamental point of view. So let me show you the situation on charts. Maybe, yes, I will start with euro to Australian dollar because I hope you remember this. I think it was the last instrument I was talking about yesterday, euro to Australian dollar. Let me remind you. So I spoke about the possibility of a reversal, right? Well, reversal is always possible. Everything is possible, but when you're a trader, you should bet on probability, not possibility. And it is always less probable that the trend will reverse. But I highlighted this situation because it had great risk to reward ratio, so much higher potential reward than risk. And I spotted that as a good counter trend trade, which I don't do. I am a trend trader, trend follower, but I cannot be blind when I see a good trading setup, right? So I told you that price approaching this long-term horizontal support. This support created by lows from 2015, from March and from April. Price approaching that support with such a strong downswing is a good opportunity, at least for a correction, not for a major reversal, but at least for a correction. And we can see that there was a bounce. There was a bounce on a daily chart. what we do have here is a bullish engulfing. Even despite the better data from Australia, we do have an upswing, so Australian dollar is weaker. So there is a bullish engulfing here. Well, obviously it's a daily chart and it's only 2 p.m. and we have to wait for this candlestick to close. But so far so good. Looks promising. There was a double bottom formation. There was a small correction now, but still this bounce seems legitimate for me, and that was a good opportunity, right? For a trading signal, obviously they need to pull the price a little bit higher, like 20 pips higher, 30, but it's not hard to be done, in my opinion, right? So I spotted the place for a potential reversal, and it happened. Short-term traders could gain over 100 pips, which is quite right, especially if you had like 60 pips stop loss, or even tighter if if you like to risk more. Euro to Australian to American dollar. Here we had this channel down formation, which actually is now can be seen as a flag now. I told you that it's a bit too long for a flag, but yes, the price decided to break the upper line of this formation, and instead of channel down, we do have a flag because it's a correction of this uptrend. Let me see the Fibonacci's, how many percent of this trend was retraced. 61.8. Also, you remember that I was telling you about the gold, that gold is touching the Fibonacci lines with a great respect. But here also it happens. 61.8. 50. 38. Obviously, Fibonacci works after the bottom is estimated, right? But those Fibonacci's are correlated with the recent supports and resistances, right? So it's also an additional signal for you. Look at that. All Fibonacci lines work. Well, those Fibonacci's are from the downswing, so they work from this point, right? From this point. From this point, those Fibonacci's would work. But also there is 38.2. Let me have that actually. Okay. So as you can see now, we're stopped at 2 times 38.2. Which can be potentially a strong resistance. And also here we have 61.8 and 23.6. So here also can be an important resistance. So now euro dollar is moving with a great respect for Fibonacci retracement. So we're gonna leave it like it is right now. Because that can be very, very useful for your trading. Again, look, those red lines. First, correction stopped on the 23.6, then 38.2, then 23.6, then after breakout, 50. Then after breakout, 61.8. Then price went up and they stopped at 38.2. Pretty amazing. Also, you know that the same happened on gold, downswing, 23.6 after breakout, 38.2, 23.6 again, breakout, 50, pullback, 38.2, bounce from this, and the price advancing higher. On a daily chart, looks very promising. This is a nice hammer bouncing from a horizontal support. and we have a continuation, so the next candlestick is making higher highs and higher lows. It looks also great on hourly chart, for example, where we do have an upswing, we do have a flag correction, depending how you this more a wedge, but anyway, it's not really important. What is important in trend continuation patterns in an uptrend is the upper line. Lower line, not, because if it's a trend continuation pattern, you should expect a breakout of the upper line, and it's happening here. They stopped a little bit on a horizontal resistance here, but they broke it. Then they used that horizontal resistance as a support, and it looks like the price will continue climbing higher. So very optimistic situation on gold. Silver as well. This is a daily chart, so you can see that we made higher highs and higher lows today. Almost every candlestick recently makes higher highs and higher lows, and we should soon be testing 38.2 Fibonacci line, which can be our main suspect for resistance. We will see. Obviously, everything can happen, especially that when we look on the previous upswings, I don't find this 38.2 a convincing resistance. More maybe here, here, here. You see this stop, this stop, this stop, that resistance, but it got broken right now. So that's rather a positive signal. I was supposed to look for resistances, and I found the support. But hey, this one does not look so bad. Maybe the price can stop here. Also, like in euro dollar, like we did in euro dollar, we can check the resistances of Fibonacci retracement of this downswing, and we can see that 50 and 38.2 come together here. So maybe here. Let's keep it that way and be prepared in the case that we will see a bounce here. Dollar to yen, here I was thinking about more positive scenario here, but the price did not want to go up and they retraced. But as long as they stay above this black line, also above this horizontal support here, which in the same time is 38.2 Fibonacci level, the sentiment on American dollar to Japanese yen stays positive, right? It looks alright. There was a bounce from 38.2, now it's just a normal retracement. American dollar to Swiss franc here, retracement was a bit stronger. They bounced from 50% Fibonacci level, they crashed 38.2, and now the price is creating a kind of a flag, but it's a flag in this downtrend. So it creates a dangerous situation of a possible breakout of the lower line of the flag. If the price will break the lower line of the flag, the next potential support is here, is located 62 pips lower. And if the price will manage to come back below this support, in my opinion, that will trigger a sell signal on American dollar to. Now let's see how the data influenced Australian dollar to American dollar. 2 days ago we had another correction equality movement, and I highlighted you yesterday potential place for a sell stop and a potential place for a buy stop, right? This buy stop in the best place would bring us 30 pips, and now would be on loss 5 pips. But as long as the price stays above this horizontal support highlighted with this green color, the sentiment here is positive. and the buy signal is still on the table. That's my view on Australian dollar to American dollar. We are making higher highs and higher lows. We are making correction equality movements. It looks like a decent occasion, but we can see that on Australian dollar we do have a deeper correction after the better data. Buy the rumors, sell the facts, and traders use that better data to sell on local tops. Canadian dollar to Japanese yen is doing exactly what was anticipated. So after a beautiful upswing, they stopped for a correction below the upper line of the wedge, right? So this bounce was expected, was anticipated. Now the thing is if they will want to have a deeper correction or more flat correction. But scenario is one. Scenario is an upswing, and most probably those lower levels here will be used for buying, because it's always better to buy here than here, right? It's always better to buy with the lower price, but in my opinion, traders would love this trend, and they will be happy to join to the party here. Next instrument is British pound to American dollar. Here we have a series of quite strange upswings, actually swings, which are not caused by any relevant news. What we are having now is kind of a symmetric triangle, but not the prettiest one in my opinion. It would be nice if this downswing would touch this line and then there was an upswing, right? And now they try to break the upper line of the triangle. I'm not sure though if that can be considered as a false breakout. I don't think I would consider this as a false breakout. If I would expect a strong downswing here. But in my opinion, it wasn't a legitimate breakout attempt, so it cannot be considered as a false breakout. For me, this pair is not tradable at the moment because it has no decent signals. American dollar to Canadian dollar here, still waiting in this descending triangle formation for a breakout. Either the upper line connecting recent lower highs, breaking this line would trigger a buy signal, or breaking the lower line, this green support, horizontal support, breaking this horizontal support, so price closing below this horizontal support will trigger a sell signal on this instrument. So here also we are waiting for a signal as we do on euro to British pound, where there is this boring side trend. So I won't waste your time with this, but I will show you New Zealand dollar to American dollar, where we had a nice upswing yesterday. I highlighted this arrow that there is a potential resistance here, and actually that's what's happening. So the price stopped at this resistance. Short-term traders, I don't know if they can be happy with 16 pips. I'm not a short-term trader, so I don't know how many pips would you like to have. I'm always hunting for 100 pips at least, or even more. But what do we have here? Something for short-term traders. As I said, there is a left shoulder, there is a head, there is a right shoulder, and breaking the neckline, which is highlighted here with this blue color, can trigger a sell signal on New Zealand dollar to American dollar. Okay, and now I will show you where the party is right now. because the party is on S&P 500. Actually, every American index is on local tops right now. Oh, near local tops. There's this upswing is so steep that there is really no way how we can draw even supports. Well, in upswings like that, we don't have resistances, right? Because I don't know where I can get resistance from. Maybe Fibo expansions or something, but I don't believe in them. I believe in retracements. But where they can stop? 2050, 2000, 2500, 2400. I don't know. Support, this one is legitimate. This one is legitimate. But here, where we can find the support? Okay, here. Is this a legitimate support? This one is? I don't think so. So maybe I will leave them in this different color because those green are legitimate, those are made up. Is the situation on DAX as well promising? Yes, it is right. The DAX is still advancing higher. Although European traders are not so optimistic, but that's what's happening for a long time. I really remember great times a few years ago. It was 2011, I guess, when Americans, well, Europeans were flat or they were declining. We had that problem with Greece, with peaks, those countries, Portugal, Ireland, Greece, Spain, Italy. And the European stocks were flat or were declining. Then Americans jumped in. They were recovering from this 2011 thing, right? When United States were downgraded, and American stocks were skyrocketing, 1%, 2%, right? So then after that, European stocks opened with optimism. They started to they wanted to use this optimism from United States, but they couldn't. And over time, this optimism from the morning faded, right? So they were closing like slightly above zero, on minus or on zero, and then Americans jumped in and pushed the price higher and higher and higher. Then another day, the same thing happened. The same thing happened all over the time. So there was a huge divergence in emerging markets, for example, stocks, European stocks and American stocks, which they were skyrocketing. So that's kind of a similar situation right now, that DAX is not very optimistic, is not advancing higher, the same as S&P 500. Let me also show you Brent oil, right? This is Brent, upswing, downswing. So actually no harm was done with this EIA data. And again, we are on the same levels as we were as we were in the middle of December, right? The price didn't change much since then. It's actually on the same levels as 13th of December. We had this is 55, 50, let's say 56. The price was on 58, and the lowest was, let's say, 53, 54. So as you can see, not big changes at all, and we are still waiting for this breakout. In my opinion, the price should go lower, But again, I'm not an economist, I'm a trader. If I will see price breaking the upper line and this horizontal resistance, for me that will be clear that there is a demand there is a demand for oil, and one should buy, right? We shouldn't argue with the technical signals. Again, you're not economists, you're traders. You look for decent trading occasions and you trade. That's what traders do. That's what we should focus on. Okay, my friends, thanks very much for watching daily analytical report. That was a good half an hour with you. I hope you get enough trading, maybe not ideas, definitely not recommendations, but trading views on many instruments. Remember that trading and investment in financial markets involves an element of risk. And for real-time information, you should follow us on Twitter and our website alpari.news, because on Twitter, as soon as we find a decent trading occasion, we post it online, right? So if you want that, you should follow us on Twitter. Again, thanks very much, and see you tomorrow.